There used to be murmurs of doubt and skepticism, but statistics don't lie, and the most recent data has given an outdated viewpoint a fresh look. We dispel myths and reveal Tesla's actual worth today. In this video, we'll be dissecting Tesla's business strategies, accelerating innovation, and explaining why, in the middle of a severe price war, now might be the right moment to add Tesla shares to your portfolio. Is Tesla's undervaluation a cue to purchase in a market where prices are being played bumper cars? Let's change direction and find out. Here at Tesla Stock News, stay tuned as we dive headfirst into the electric realm of Tesla's market dynamics. However, before we begin, please remember to smash the notification bell, hit the like button, and subscribe to Tesla Stock News. Let's get going now. In January 2020, with the world on the verge of the COVID-19 pandemic, two investors were having an engaging chat about Tesla Incorporated's future. A talk that turned out to be remarkably insightful and incredibly foolish. Viewers may remember, looking back, that Tesla surprised the market in the third quarter of 2019 by reporting a quarterly profit of $143 million for the first time. The indication was unambiguous. Tesla had ushered in a profitable phase that would completely transform its performance in the market. The company that was at the center of the Tesla tale was one that was experiencing rapid growth. Following 2 quarters of profitability pre-split adjustments, its stock value shot up to $1,450. This served as the setting for a daring gamble that went against the odds, underestimating Tesla's explosive potential and casting doubt on the company's capacity to cross the $700 barrier before the end of Q1 2020. This was a bet made in a world where the unexpected global event that was COVID-19 would not only test the mettle of economies and enterprises alike, but also serve as a litmus test for the future of mobility and Tesla's success on the market. Unexpectedly, Tesla's stock price unexpectedly surpassed market analysts' predictions by almost hitting $11,000 in that quarter. This result acted as a sobering reminder of how uncertain stock market investments can be. Even the wise investor Warren Buffett acknowledged the exceptional trajectory of Tesla by withdrawing from the battle with Elon Musk's unstoppable leadership and selling his stake in electric car maker BYD Company Limited. Following that pivotal wager, Tesla has set out on an incredible journey, consistently providing its investors with returns that far outpace average market increases. This, my viewers, is a prime example of the value of flexibility and creative thinking in the field of investing. Principles that occasionally call for us to go against our deeply held beliefs in order to achieve success. Tesla's rise from modest beginnings to a powerful market presence is the quintessential business zero-to-hero tale. By the second quarter of 2023, Tesla's electric vehicle business accounted for the majority of the company's astounding $21.3 billion in revenue. This enormous revenue represents an astounding 3,946% growth rate since 2013, or an average yearly growth rate of almost 395%. When one thinks back to Tesla's early years, the story was very different. Due to its excessive reliance on government subsidies and unstable finances, the venture was on the verge of failing. A pivotal moment occurred in 2008 when Elon Musk, the CEO, disclosed the business's near bankruptcy, highlighting the dangerous route such entrepreneurs frequently take. This risky start demonstrates the instability that early-stage businesses are subject to and emphasizes the idea that having potential does not shield a company from the possibility of failing. Tesla's journey did not finish there, despite significant obstacles. With tenacity and unwavering innovation, the business turned around its fortunes, reporting operating income of over $13.7 billion by the end of 2022 and an operating margin of 16.8%, a figure that indicates both profitability and industry leadership in the auto sector. Now let's focus on the larger EV market. It may be interesting to our viewers to see that in 2020, EVs made up only 2.2% of the U.S. vehicle market. By the end of 2022, the proportion had more than doubled to 6.1%. This percentage is currently expected by analysts to increase to 8.5% by the end of 2023. But there's also a bigger picture to take into account. EV sales accounted for 16% of all light vehicle sales worldwide in the first half of 2023, a startling 49% increase from the previous year. This trend is here to stay and will only pick up steam as more nations implement laws restricting the sale of cars with internal combustion engines. The market for electric vehicles has become a titanic struggle between established players like Mercedes-Benz, BMW, Ford, Volkswagen, and Stellantis, and a host. For the benefit of our audience, the Tesla Model 3 is currently the best-selling electric vehicle in the US, yet as of August, its transaction price had dropped by 21% from the previous year. Not only the Model 3 is following this pattern, other models are also cutting prices to remain competitive. Tesla has a distinct advantage thanks to its direct-to-consumer sales approach, which avoids using conventional dealerships. This keeps the business more agile than its rivals by giving it more control over its pricing tactics and preventing extra expenses. Tesla's market share is still strong despite these aggressive pricing strategies, which is evidence of its strategic intelligence. Elon Musk, the business's CEO, has made it clear that the corporation is currently more concerned with growing sales than profit margins, and that the success of its highly anticipated fully autonomous software will determine the company's future profitability. Even while this sales before profit strategy may be tactical, investors may not always agree with it. Now let's shift gears and discuss the international landscape. China is the market leader in this industry, accounting for half of all EV sales worldwide. Europe is the second largest market after China. However, BYD, not Tesla, secured the lion's share of EV sales in China during the first half of 2023, holding a 21% market share, with Tesla keeping a close tally at 15%. In the midst of the fierce rivalry in the EV market, it is critical that our audience understands Tesla's pioneering role in this sector, a characteristic that has given the business significant advantages over competitors. Let's start by highlighting Tesla's technological capabilities. When it comes to advanced electric vehicle technology, the firm is leading the way. Tesla's vehicles have exceptional performance, fast charging times, and outstanding range because to their significant expenditures in battery innovation. With these characteristics, Tesla remains at the forefront of both consumer demands and EV technology. Second, Tesla's strategy for vertical integration exemplifies operational efficiency like a textbook. By managing its supply chain, especially for battery manufacturing, the business reduces expenses and upholds tight. Unmatched quality control is achieved. Quick design revisions are made possible by this flawless integration, which increases productivity and lowers production costs. Thirdly, Tesla is frequently seen as a forerunner in the field of autonomous driving. Tesla is a forerunner in the race towards completely autonomous driving thanks to its cutting-edge driver assistance technologies and an abundance of data to improve its algorithms. Finally, take into account the Tesla supercharger network, an ever-growing network of charging stations that greatly reduces EV owners' range anxiety. This network strengthens Tesla's standing in the market and enhances the attraction of the company's automobiles. Tesla is proactively expanding, directing its technological capabilities towards a variety of commercial opportunities. The fact that Tesla is expanding, even if its current success is almost entirely dependent on EV sales, may appeal to viewers. With Tesla expanding into solar energy solutions and introducing items like solar panels and cutting-edge solar roof technologies, the energy industry is a flurry of activity. The potential market for these technologies is enormous, given the global need for clean energy options. With the Powerwall and Powerpack, Tesla is leveraging its cutting-edge battery technology to break into the energy storage market at the same time. These inventions are more than simply goods. They're a lighthouse for off-grid, sustainable living, and a lifesaver during blackouts. Let's talk about valuation now. The idea that Tesla is cheap may cause some people to scowl, particularly considering that its forward price-to-earnings ratio is currently sitting at 74.4 times its anticipated FY24 earnings. But context is everything. The current valuation of Tesla is well below its historical 5-year average forward PE of 119 times by nearly 37%. Moreover, the forward enterprise value to EBITDA ratio currently indicates a 5% discount, since it is somewhat below the 5-year average. It's wise to keep in mind that these valuations account for the anticipated decline in Tesla's EBIT in 2023, which will be impacted by the EV market's competitive pricing environment. But looking ahead, a recovery in EBIT is expected by 2024, supported by a market correction that permits margin recovery. As it has always raised the standard for the industry, Tesla's margins are expected to soar from an estimated 11% by the end of 2023 to a healthy 20% by 2032. Sales are predicted to reach $480 billion by 2032, representing an annualized growth trajectory of 38%, based on a discounted cash flow model that incorporates analyst consensus from sites such as Seeking Alpha. By the same year, this model projects an EBIT of $96 billion. For investors, what does this mean? With a current price of $253, Tesla's estimated fair value is $324 per share, indicating a significant undervaluation of around 29%. Although there might be some short-term volatility, such as responses to the next earnings release, the investment thesis is still strong for investors with a long-term perspective. It is truly amazing how far Tesla has come from near bankruptcy in 2008 to being an EV leader, with revenue rising by an astounding 3,946% in just the last 10 years. Even though the business is only now profitable, it is already producing a sizable amount of free cash flow, which is a crucial indicator of an investment's viability. The subsequent price battle is shaping the future of the industry as the EV market soars. With its sophisticated EV software, superior battery technology, and wide-ranging charging network, Tesla not only maintains its market leadership in this environment, but also indicates a positive growth trajectory. Given that the current price of Tesla's stock represents a 29% discount to fair value, and in spite of fierce competition, there is a lot of optimism regarding Tesla's future. Investment strategies may find Tesla to be a compelling addition to their portfolio, particularly those with a long-term perspective. That concludes our in-depth analysis of Tesla's situation and future prospects. With its distinctive blend of innovation and strategic foresight, Tesla continues to navigate the turbulent waters of the electric vehicle market. This includes its creative pivot into solar and energy storage solutions, as well as its valuation that begs for opportunity. Tesla may be able to maintain its market leadership in the years to come thanks to its technological prowess, efficient production methods, and diversity, even in the face of fiercer competition and a more complicated business environment. For investors with patience and an eye towards the long-term gain, Tesla's investment potential appears bright, with an estimated fair value that is significantly higher than the current stock price. What are your thoughts on Tesla's current marketing approach? Does this possible undervaluation mean that investing is a good idea, or do you think the competition will make Tesla's prospects less bright? When thinking about adding Tesla to your portfolio, how do you balance the risks and opportunities? Post your ideas in the comments section below. Additionally, if you thought our analysis was insightful, don't forget to subscribe to Tesla Stock News and hit the like button. We appreciate your time, and we'll see you in the next video.